Welcome to today's market report.
European shares closed flat on Friday as gains in defensive countered a sell-off in semiconductor and commodity-linked stocks. While investors prepared for the European Central Bank's first interest rate hike in over a decade this month, data on Friday showed Eurozone inflation came in higher than expected and hit yet another record high in June. That firmed the case for an ECB rate hike as the inflation peak could still be months away. Aggressive central bank moves to curtail inflation have left investors worried about the likely hit to economic growth. The Stoxx 600 lost 1.4% this week and has shed more than 16% this year as worries from stubborn inflation to China's slowing economy and Russia's invasion of Ukraine curbed risk appetite. The door is open for the ECB to be significantly more aggressive to try and stand down on inflation. The continent-wide Stoxx 600 index cut session losses of up to 1% a day after marking its worst quarter since the pandemic led in selling of early 2020 and tracking a dull Wall Street session. Most major European bourses ended in positive territory. What we could be seeing in the markets is a little bit of a dead cat bounce after yesterday's pretty steep losses rather than a move that's explicitly tied to that inflation data. Dutch semiconductor equipment maker ASML, Franco-Italian chip maker ST Microelectronics and German chip maker Infineon slid between 2.9% and 5.4% after US memory chip firm Micron Technology gave a significantly weaker than expected business outlook on Thursday. According to market analysts, if the Bank of England does not keep step with the hawkish guidance of the Federal Reserve, there is a risk that the pound could weaken further. They see the risk of dips in the pair of GBP USD to 118 on the 3-month view. The pound trips below the 120 mark, reaching a 2-week low near 119.75, while the euro fell to 103.65 versus the greenback. Nevertheless, the dollar index gained 0.36% at 105.12.
This is today's market news. Thanks for listening. We'll see you next time.